Hello all, good morning. So we are starting with the second chapter, chapter 6A deductions. So we are starting with chapter 6A deductions, sir. Again, this chapter will not have a straight question. There won't be a straight 7 marks question from deductions chapter. There may be MCQ. MCQ also, we cannot say certainly there will be an MCQ, but chapters like DTAA, tax planning, chapters like DTAA, tax planning has the relevance of chapter 6A deductions. Okay, and understand, sir, mostly these deductions are available only under old regime. Only few, very few deductions are available under the default regime. Mostly under the old regime only. So you should specifically remember 3 or 4 are there which are available under the default regime also. Okay, first one. Sir, if you remember the format of total income, how do we compute total income? First we will take incomes from all the heads computed. Then we do apply clubbing provisions, set off carry forward provisions, then we'll get gross total income. Then from gross total income we'll subtract chapter 6A deductions. Let's say we have gross total income of 10 lakhs and the deductions available are 12 lakhs. Then if we subtract 12 lakhs, can the net total income be negative 2 lakhs? No, right? So net total income maximum it can become 0. It cannot become a negative figure. So that's why the aggregate of all the deductions cannot exceed gross total income. All the deductions cannot exceed gross total income. Okay, that's the first point. Aggregate of all the deductions cannot exceed gross total income. Then second point, sir. Special rate incomes like 112A, 111A, 112, betting, okay, on these incomes, lottery, undisclosed source of incomes, on these incomes we cannot claim chapter 6A deductions. Okay, on the special rate incomes like 111A, 112A, 112, casual incomes, undisclosed source of incomes, on these we cannot claim chapter 6A deductions. See, for example, a person having long-term capital gain of 3 lakhs under 112. Long-term capital gain under 112A, 1,50,000. Lottery income, 1 lakh. Sir, this long-term capital gain under 112, special rate. 112A, special rate. Lottery income is also special rate, 115 BB. Okay, then salary, 2,50,000. Out of all these, which is the income chargeable to tax at general or normal rates? Salary alone is taxable at normal rates. So what is the gross total income, sir? 8 lakhs. Let's say this person is having deductions like 80C 1,50,000, 80D 50, 80E 2 lakhs, 80G 3 lakhs, 80CCD subsection to 1,20,000. So total deductions how much, sir? 8,20,000. First point what we said, the total aggregate of deductions cannot exceed gross total income. Okay, first it is restricted to 8 lakhs. Then second point what we said, deductions can't be claimed on long-term capital gain, special rate incomes. So here these three are what? Special rate incomes. So on this special rate incomes, we cannot claim deductions. So what is the general rate income? 2,50,000. That means only to the extent of 2,50,000 we can claim deductions. So that's why we claimed how much here? 2,50,000. Then the net total income is how much? 5,50,000. 5,50,000. Sir, what is the tax on 5,50,000? $7,500. You are wrong. Why? Old regime. You should calculate old regime. Sir, why? Sir, if it is default regime, I already said, you will not get deductions. Okay, in default regime, most of the deductions you will not get. Okay, if this many deductions we are claiming now, obviously under where? Old regime. Okay, so old regime means what? 0 to 2.5 lakhs, nil. So 2.5 lakhs to 5 lakhs, 5%, which is 12,500. Plus on the above 50,000, 20%, 10,000. So total tax is how much? 22,500. Okay. Sorry, sir. Sorry. Sir, this total net total income 5,50,000 is what? Special rate incomes only. We should calculate what? Using special rates. So 3 lakhs into. Okay, but again, sir, here also unexhausted basic exemption limit concept will come. Unexhausted, here if you need to calculate tax, first there is no general rate income, assuming he is resident individual. If he is resident individual, then first what will come? Unexhausted basic exemption limit. How much is the unexhausted basic exemption limit? 2.5 lakhs. Okay, let me do that, sir. Tax calculation. First, unexhausted basic exemption limit, how much? 2.5 lakhs. Okay. Sir, we have long-term capital gain under 112, 112A and lottery income. Sir, unexhausted basic exemption limit can be adjusted only with 111A, 112, 112A incomes only, not with any other special rate income. So with this lottery income, we cannot adjust. We have 112 income and 112A income. Both are taxable at what rate? 12.5% only. So I'll go with 112. So out of 3 lakhs, if you adjust 2.5 lakhs, how much you will be having, sir? 112, 50,000. So 50,000 into 12.5%, 6,250. Then we have another 1,50,000 here. 1,50,000, sir, this is 112A. First 1,25,000 is not taxable. So 1,50,000 minus 1,25,000. Now how much is there, sir? 25,000 into 12.5%. How much? How much? 3,125. Then we have casual income like what? Betting, gambling. That is taxable at what rate? 30%. How much that is? 30,000. So total is how much? 39,375 is the total tax. Okay. Is there any chance of rebate? Rebate under which regime this is first? Old regime. What is the limit? 5 lakhs. Okay, since the gross net total income exceeds 5 lakhs, he is not eligible for rebate. Okay, and remember, sir, under old regime, there is no restriction that we can't claim rebate on special rate incomes. Only on 112A incomes we can't claim rebate under old regime. On the other incomes we can claim rebate. That means on this betting we can claim rebate. On this first 112A income, 112 income we can claim rebate. But what is making ineligible here? The net total income exceeds 5 lakhs. Understand, sir? Okay. Then sorry, PDF file share now. shared. So, next one, sir, deductions. Sir, deductions. Sir, while claiming deductions, we made certain payments and government wants to encourage us doing certain payments or savings, investments you are doing. Sir, by doing investment or saving or any payment, initially the money is going out from you. Okay, there's an outflow. So those I am referring as payment side. Okay, it doesn't mean they are expenses. Sir, if you take a LIC policy, it's like an investment also. Okay, if you invest in mutual funds, it's an investment. Okay, so that's why I'm not saying these are like expenses, but understand, sir, you are making certain payments. It's not income kind of, you are making certain payments. Government wants to encourage those kind of payments and they are giving deductions. Sir, first, since it is an outflow, there is no income. But government wants to encourage those kind of investments or those kind of outflows, so they will be giving it as deductions. So what to do? Straight away, how much ever amount is allowed as deduction, that amount you will claim as deduction. Second type, sir, those are incomes to you first. Okay, and government is encouraging them also. So first you should recognize as income, then again you will claim it as deduction. The best example is like 80 TTA, savings bank interest. Savings bank interest. So first you got what? Interest income. Let's say 10,000 is the savings bank, 30,000 is the savings bank interest you got. First, interest taxable under which head? IFOS head. So under IFOS head, include savings bank interest 30,000. Do gross total income. Now you will come to 80 TTA. Sir, 80 TTA says like 10,000 is allowed as deduction with respect to savings bank interest. That 10,000 again you will subtract. Okay, what we shall not do, straight away we cannot claim deduction out of 30, 10,000 we cannot claim and say only 20,000 as the savings bank interest in the IFOS head. First you take the full income which you have, include it in the respective head, include it in the gross total income, then how much ever deduction is allowed, that has to be subtracted. Why? Because this is first in income. So include it as income and later again claim as deduction. The other side of deductions or other type of deductions are like, they are not even incomes. You made certain payments, you made certain investments, but still government wants to encourage them, so they are giving as deductions. So first they are not incomes, but straight away you will claim as what? Deductions. Sir, you paid life insurance premium, sir, 1 lakh rupees. Can be claimed as deduction under 80C. Can be claimed as deduction under 80C. But is there any income there relevant to that life insurance premium? No. You might have paid that 1 lakh from your salary income, business income or some other incomes that already included. To this LIC premium, currently there is no income. Okay. So what you will do? Do the normal income computation only. How much ever is allowed for LIC premium, that can be claimed as deduction. Okay. Then following deductions. These following deductions can be made only when the return of income is filed on or before the due date. Sir, what are the due dates of filing return of income? Individual na 31st, sorry, we'll go with in the order, sir. First, person to whom audit applicable. If they are companies, partnership firms and any other person to whom tax audit is applicable. What is the due date of filing of return of income? 31st October of assessment year. Then for the same people, if transfer pricing provisions are applicable, section 92 transfer pricing provisions are applicable, then the due date is 30th November of assessment years. Others, I mean for them transfer pricing is not applicable, they are not companies, and for them tax audit is also not applicable. Then rest all nothing but individuals, HUFs for whom tax audit is not applicable. For them what is the due date, sir? 31st July of assessment year. Okay. So following deductions can be made only when the return of income is filed on or before the due date. What are those deductions, sir? 80 I series. I series, na, there is IA, IAB, IAC, IB, IBA, IE. Okay, we will not discuss all these also. Okay, but IT I series. Then 80 JJA, 80 JJAA, 80 LA, 80 M, 80 P, 80 QQB, 80 RRB. So these deductions are allowed only when the return of income is filed on or before the due date. If not, these deductions are not allowed. But only these are the deductions, or no? There is 80C, 80CCC, 80CCD, 80D, 80E. Like that, there are so many other deductions also. All of them can be claimed, even if you are filing a belated return. But these deductions can't be claimed if you are filing a belated return. What are those, sir? I series 80I, JJA, JJAA, LA, 80M, 80P, 80QQB, and RRB. Out of this important are like QQB, RRB, JJAA. Then, sir, here, look at this point also. Sir, audit report, sir, if you remember the timelines or not, I mean, I don't know whether you remember or not, but if audit is applicable, the due date for filing return of income is 31st October assessment year. But the due date for filing audit report is 1 month prior to it. 1 month prior to it. That is what? 30th September of assessment year. Okay? Return of income by 31st October. Whereas audit report 1 month prior. That means by 30th September only. So what they are saying, audit report can be filed belatedly, no problem. But return of income should be filed on or before due date. Understand, sir? Audit report can be filed belatedly, but return of income has to be filed on or before due date. Okay. So now we are moving on to 80CCE. 80CCE. Sir, 80CCE will not talk about a separate deduction. 80CCE says there are three. Okay. 80CCE gives a maximum, a cap for deductions to be claimed under. Sir, the total 80CCE does not suggest a specific investment or specific deduction available. 80CCE acts as a cap or a limit for three sections together. What are those three? 80C, 80CCC, and 80CCD subsection 1. For all these three sections together, the maximum deduction that can be claimed is restricted by 80CCE. How much is the maximum, sir? The maximum deduction that can be claimed is 1,50,000. Okay, what are the three sections together, sir? 80C, CCC, CCD subsection 1 only. Sir, in CCD there is subsection 1, 1B, subsection 2 also there. But 80CC restricts only to the extent of 80CCD subsection 1. Okay, 80C, 80CCC, and CCD subsection 1. All these three together, the maximum deduction we can claim is 1,50,000. Okay, so now we are moving on to 80C. 80C talks about deductions with respect to specified investments. Deductions with respect to specified investments. Okay, first, to claim 80C deductions, SSC should be individual or HUF. Sir, under 80C, they'll give a list of investments you can make or list of payments you can make. But aggregately, all of them together you can claim is 1,50,000. Back of the mind, you should even remember, not only 80C, 80C, CCC, CCD, subsection 1, all the three together also you can claim how much? 1,50,000 only. Okay? Sir, for firms, companies, 80C deduction is not available. It is available only to whom? Individual and HUF. Okay, the maximum amount is 1,50,000. Okay, see, life insurance premium paid. Life insurance premium paid is eligible for deduction. But for whom the life insurance premium can be paid? Individual himself, for his spouse, and for his child, irrespective of whether they are major or minor. I mean, dependent or independent. Does parents covered here? No, that means life insurance premium paid for parents is not eligible for 80C deductions. Okay, I'm writing. You can also write. There also, I don't think it was there clearly. Okay, let me show you that material. So himself, spouse, child. Sir, for child, irrespective of what? Minor or major. Okay. Parents covered or not covered? Not covered. Sir, first point correct only na. Aggregate of all deductions shall not exceed gross total income. No deductions under chapter 6A allowed from gross total income to the extent it includes capital gains under 112A, 111A, 112 and casual income. We solved an example. Example correct only na. Long term capital gain 3 lakhs, salary 2 lakh 50, lottery income 1 lakh. Sir, this is what 3 lakhs special rate. Salary normal rate, lottery income again special rate. So we can claim deduction only to the extent of how much? 2 lakh 50,000 only. So 2 lakh 50,000 only claim. The balance net total income is how much? 4 lakhs, correct only. Then deductions are of two types. Okay, it's not like expense, investment linked or payment side deductions. These are allowed in respect of certain payments. Straight away will reduce from gross total income to the extent allowed. Examples are like ADC, ATD. Whereas income and savings linked. Okay, you got any income kind of savings bank interest, ATTTA. First include such income in the respective head and then claim deduction to the extent allowed. Following deductions can be made only when the return of income is filed on or before the due date. What are those? 80 I series, JJA, JJAA, LA, M, P, QQB, RRB. Okay. Then ATCCA says what? The maximum deduction that can be claimed cumulatively for ATC, ATCCC and ATCCD subsection 1 is 1,50,000. Then we started discussing about ATC, individual and HF. Maximum deduction available is how much? 1,50,000. So first we are talking about what? Life insurance premium paid. Okay. For whom life insurance premium can be paid? Individual can pay for himself, spouse, children, whether they are dependent or independent. Parents are not covered here. Okay, in question they'll give sir life insurance premium paid for parents. Okay, that is not eligible for ATC deduction. Okay, life insurance premium, sir, understand, sir. Once, if you take a life insurance premium, you will pay only once the premium. Huh? Every year, maybe for 20 years, 20 years, every year you will be paying premium. So every year you can claim deduction. Not just 1 year you will be claiming deduction. Every year when you are making the premium, you are making the payment of premium, you can claim deductions. Then on maturity, on the expiry of policy, on the maturity of policy, you will get the policy sum insured plus bonus plus interest. Is that taxable? Yes, sir, there is an exemption under 1010D. If it is within and if it satisfies the conditions of 1010D, then it is exempted. Otherwise, it becomes taxable. If taxable under which head? IFOS head. Okay, this is other income only, na? So taxable under IFOS head. Sir, this happens only once. Premium we need to pay every year, but maturity of policy will happen only once. That time we need to check whether it has satisfied the exemption conditions or not. If satisfied, exempted. Otherwise, taxable. So this is about what? Life insurance premium. Yes. After exemption, if any amount is taxable, I am not saying like full amount is exempted. We need to check 1010D conditions. If those conditions are satisfied, then it would be exempted. If not exempted, then taxable where? IFOS head. Okay? Or else part amount is only exempted. Then the balance amount is taxable where? IFOS head. Got it? 6A deductions is for paying premium. Okay? Then what is happening? You paid premium. The premium payment tenure is completed. You are getting the policy amount. So policy amount comes when, let's say there will be two triggering points. One is like expiry of certain period or expiry of the policy holder itself. Okay, on happening of them, the policy amount or the maturity amount will come. So that time when you receive that lump sum amount, it has to be treated as income. So you should check whether exemption under 1010D is available or not. If it is available, fully available, then there is nothing to tax. What is not, what, I don't understand what you are not able to understand. It's not 10A. Don't include 10A. 10A is a separate thing. Okay. So generally section 10 is for what? Exemptions. Generally section 10 is for exemptions. So under 1010D, I am not referring 10AA. Under section 10, subsection 10D, there is an exemption with respect to life insurance policy proceeds. Okay? Why you will not take exemption? Why you will not take exemption? I don't understand. Why you are linking 10AA? So first you tell me, how do you treat exemptions? Basic interlevel points. How do you treat exemptions? Okay, exemption income unte em chestam manam? Anybody? Okay, exemption income unte em chestam? So let's say you have agricultural income. So what you will do? Cheppandi evaro okru. Okay, will not include. Let's say you have 20 lakhs total business income. Out of that, 10 lakhs is agricultural income. Now how much you will take under PGBP? Tea, coffee, rubber is there, na? There 60%, 40% will be there, right? You have 20 lakhs. 60% agricultural income, 40% business income. So what you will do? How much you will take into the total income statement? 40%. So what you are doing? Exempted income, straight away you are leaving, na? That's what you will do everywhere. Yes, that you need not to ask and I need not to stress every time. Exemption is, that's the logic. The only exception is 10AA. Able to understand? The only exception, 10AA is like deduction. What you will do? Total income, whatever the benefit you get, first include in the total income, then only claim it as a deduction, just like as savings bank interest. Okay? Any other exemption, don't apply that logic. How generally will treat exemptions? Whatever is the exempted income, you will ignore there itself. Taxable income only will bring into the statement. Okay? So you need not to specify or I need not to specify every time. Exemption means that's the policy. Okay? Exempted incomes will exclude there itself straight away. Taxable part only will bring into the statement. Clear? Okay. So here whatever is exempted, you leave there itself. If any part is taxable, bring into the statement. Which head? IFOS head. Okay. Then to claim deductions, there are certain conditions here. Okay. First, to what extent we can claim deduction, there are certain conditions. We need to check when the policy has been taken. Policy taken on or before 31st March 2012. Policy taken on or before 31st March 2012. Then in such case, how much is allowed as deduction, sir, with respect to every year? Premium paid or 20% of the sum insured, whichever is lower. Premium paid or 20% of the sum insured, whichever is lower. Sir, let's say policy is for 50 lakhs. Policy is for 50 lakhs. So premium paid every year, you paid premium of 75,000. 75,000 is the every year premium you paid. So how much, and the policy was taken before 31st March 2012. Let's say the policy is taken in the year 89. And still you are continue to paying the premium. Okay. So how much is allowed as deduction? Premium paid 75,000 or 20% of sum insured means how much? 50 lakhs into 20%. Now how much, sir? 10 lakhs. So 75,000 or 10 lakhs, whichever is lower. 75,000 is allowed as deduction. Okay. Now the policy is issued on or after 1st April 2012. Let's say the policy is taken in the year 15-16. Sum insured is for 40 lakhs. Sum insured is how much? 40 lakhs. And the premium paid every year is like 70,000. Every year you paid premium 70,000. Sum insured is for 40 lakhs. So now first, premium paid how much? 70,000. Or 10% of sum insured. How much? 40 lakhs into 10% na? 4 lakhs. Out of these two, whichever is lower means how much, sir? 70,000 is available as deduction. Okay. Then if he is a disabled person and the policy is taken on or after 1st April 2013. On or after 1st April 2013. Let's say in 16-17. Taken for whom, sir? Disabled person. Sir, what about normal person? Normal person, na, this only. Premium paid or 10% of the sum insured, whichever is lower. Whereas disabled person, na, what we should check? If it is on or after 1st April 2013, premium paid or 15% of the sum insured, whichever is lower. Let's say, sir, the premium paid is 1,80,000, whereas the sum insured is 30 lakhs. Sum insured is 30 lakhs. So premium paid how much, sir? 1,80,000. And the sum insured is 30 lakhs. 30 lakhs into what we'll do? 15%. How much? 4,50,000. Out of these two, whichever is lower. So what is lower? 1,80,000 is the deduction available. 1,80,000 is the deduction available. Will we get fully 1,80,000? Total ATC deduction is how much? 1,50,000. So it again gets restricted to 1,50,000. So here, yes, this is the condition. But overall, you can claim only to the extent of 1,50,000 only. Sir, it's more of limits only. If you don't revise, you will not remember. For sure. Okay, deductions chapter. I know most of you didn't, you skipped the deductions chapter. You don't like TDS chapter. You don't like PGPP chapter. Salaries also, usually you should not like. But what happens now in inter-level, the faculties will teach first salaries chapter and make sure that you will by heart all those things. They'll repeat number of times. So somehow you learn salaries chapter. I don't think you will remember all those things, but at least for the sake of inter-level, you will at least learn salaries chapter. Okay, capital gains you learn averagely. Okay, half part formats and all you know, but when it comes to the exemptions part, okay, by that time you will get exhausted and you leave that part also. But the point is, whatever you left there are only important here. Okay, whatever you learnt there like set off carry forward, clubbing, IFOS income, or of no weightage here. Yes, those points, those concepts also will come here and there, but they are not of much importance. Okay, so remember one rule, sir. In any professional course like CA or CMA, you think like you skipped one part or one chapters in inter-level, and then you can make it, you can clear CMA final, but it doesn't happen like that. At any stage, the institute will be trying to catch you. Okay, if everything you learnt, okay, I learnt everything, I know everything, only that clarity if it comes, then only you will get cleared. So instead of leaving certain topics or concepts, try to learn. At least, sir, single group students. If you are a single group student preparing for single group, now also you have enough time. Okay, don't think of leaving certain chapters outrightly just because you have a phobia. You can learn now also, there is enough time. Okay, you can learn even from beginning also, you can learn PGBP even now, starting now also. Okay, sir, 2 months I learn. Okay, 2 months is not required, sir. 4 or 5 days we can learn PGBP properly, but you should do enough revisions. First, remove that phobia, and tax, there is nothing else. The more number of revisions you do, the more you will remember. Once you remember the points more, then automatically the connections will happen. Understood, sir? So deductions chapter, nobody will remember with one time reading or one time listening to the class. This chapter, first chapter, those limits, everything requires lot of revisions only. So that's why these are called as fundamentals. Basics, this deductions chapter, written off income chapter, these 3 chapters are fundamentals for final. Okay, once you know these 3 chapters, then you can think of any other chapter. Okay, these 3 chapters, I will not say this much weightage, that much weightage. Even 0 weightage also, you should learn these 3 chapters, then only you should go for other chapters. Sir, first one clear na? ATC, life insurance, premium paid. For whom it has to be paid? Spouse, children, or himself. Children could be dependent or independent. Parents are not covered. HUF could pay it for any member of HUF. Okay. What is the amount of deduction available, sir? Dependent, it decided based on when the policy has been taken. Before 2012 or after 2012. Before 2012, na, premium paid are 20% of the sum insured, whichever is lower. After 2012, na, premium paid are 10% of the sum insured, whichever is lower. Then if he is a disabled, from 31st March to, from 1st April 2013, premium paid are 15% of the sum insured, whichever is lower can be claimed as deduction. Then if any contributions has been made to unit linked insurance plan, nothing but, sir, whatever premium you paid, out of that certain amount will be invested in mutual funds. Okay, if the mutual fund performed well, you will get more sum insured. Okay, that's called unit linked. Units na related to mutual funds, unit linked insurance plan. So they'll give you a minimum sum insured, 20 lakhs, 25 lakhs. Okay, out of the premium you paid, some part will be allocated for risk, and that will be taken by insurance company. The balance part will be invested in units on behalf of you. If those units performed well, those mutual funds performed well, and your total amounts paid became 50 lakhs, then you will get 50 lakhs. Sir, they became only 10 lakhs, but still you will get the minimum sum insured. So you have a minimum amount secured, and if those units perform well, you will get much more bigger amount also. So when you make any contribution to unit linked insurance plan, that is also eligible for ATC deduction. And any premium for contract of deferred annuity of employee. And then employee's contribution to PPF. PPF means what, sir? Public Provident Fund. SPF means Statutory Provident Fund. And RPF means Recognized Provident Fund. PPF, SPF, RPF, which is not there. URPF is not there. URPF means what? Unrecognized Provident Fund. So any contributions made to unrecognized Provident Fund are not eligible for ATC deduction. Okay. Who can contribute, sir? SSE, individual. He can contribute for himself, spouse, and even child. HUF it can be contributed for any member. Then contribution to any approved superannuity fund. Superannuity na nothing but retirement fund. Any approved retirement fund related you are making contributions. Then any sum paid or deposited to Sukanya Samruddhi account. Sir, Sukanya Samruddhi account is introduced to protect girl child's education. I mean, it's a scheme which, I mean, it's an account which will be open at the time or below 3 years of a girl child. Okay, then from then the parents will be depositing every month some amount into that Sukanya Samruddhi account, and it can't be withdrawn until the child becomes major. Okay, once she becomes major, she can use that money for her education or for her marriage. Okay, that's why they have introduced this Sukanya Samruddhi account. So now parents, if they are depositing any amount to Sukanya Samruddhi account, that amount they can claim as deduction under ATC. Okay, then any subscription to National Savings Certificate eligible for ATC deduction. Contribution to approved annuity plan of LIC. Annuity na again retirement, sir. This plan will give you, annuity plan means instead of giving you lump sum amount, it gives you monthly pension kind of payments. That's called annuity. Sir, you will get 50 lakhs, one option. This is what the bulk lump sum amount you are receiving. Now otherwise, instead of 50 lakhs, from the age of 60, every month you will get 50,000. Okay, then that is called as what? Annuity. That is called annuity. So contribution to approved annuity plan of LIC, contribution to notified units of mutual funds. Okay, then this is again important. Payment of tuition fee in university, college or school. So tuition fee, not after school you will go to tuition, right? Not that tuition here. Tuition means the fees paid for education only. Okay, but in colleges there will be different names like building fund, deposits. Okay, in all these premium colleges and all, where the admission fees and all will be like 10 lakhs per year, 12 lakhs per year, there the total 10-12 lakhs which they collect will not be tuition fee. Out of that amount, some amount may be for building fund, some amount may be for refundable deposit, some amounts may be non-refundable security deposits, and then for the purpose of like providing bus facility, uniform related, books related. So different breakup will be there. Out of all those breakups, whichever is tuition fee, that element is eligible for ATC deduction. Only to the tuition fee. Nothing but education related fee, how much ever they paid, that is eligible for deduction. Okay, payment for tuition fee, university, college or school. Okay, it should be a full-time education. Sir, this education should be where full-time education in India, maximum 2 children. Sir, many people go to abroad for doing masters. US, UK, they will be going for masters, and they will pay fees in the foreign universities also. But whether that amount can be claimed as deduction, no. It should be education where? In India, and that should be a full-time education in India, and that deduction is also available for maximum 2 children. Sir, out of all these, important ones are like first one LIC premium. Second one, contribution to Sukanya Samruddhi account, eligible for deduction. Third one, payment of tuition fee. To whom? Universities, college and schools. University, college and schools. Okay. It should be for full-time education in India. How much is allowed maximum? Maximum for 2 children. Then next one is also important, sir. 10th one and even 11th one. Repayment of housing loan. Repayment of housing loan. When you are repaying housing loan, sir, on loan you will have interest, you will have even principal. Interest we are not referring here. We are talking about principal element. Sir, then what about interest? Sir, interest you can claim as deduction under house property itself. House property related interest deduction can be claimed under house property head only, 24B. Self-occupied property na maximum interest you can claim as deduction is 2 lakhs. Let out property na maximum interest you can claim deduction is like no limit at all. You can claim how much ever you want. So interest element not here. House property head only. Okay. Here under 80C we are talking about principal repayment. Sir, every year, every month you are paying EMI. Let's say 25,000. In the 25,000 there will be interest element as well as principal element. Let's say 15,000 is principal, 10,000 is interest. So total in a year how much principal you paid? 15,000 into 12 na 1,80,000. That 1,80,000 you can claim as deduction under 80C. But whether total 1,80,000 is allowed? Maximum up to 1,50,000 only. That also considering other investments also. Then subscription to certain equity shares and debentures. So then, sir, repayment of amount borrowed by SSE from government, bank, society, life insurance corporation if he is a government employer. Then investment in 5-year term deposits. Okay, 5-year term deposits. Subscription to notified bonds issued by NABARD. Contribution to National Housing Bank. Term deposits if any. Investment in 5-year post office time deposit. Sir, many people will do this. Post office savings and all they'll do. Okay. Every month they can deposit certain amounts and it will be locked for 5 years. They cannot withdraw until the expiry of 5 years. And post office will be giving them 8%, 9% some interest. So those are called what? 5-year post office time deposits. Those are also eligible for ATC deduction and deposit in senior citizen savings rules. So okay. Sir, can we remember all these? No, we cannot remember all these, sir. But important ones let me mention here. Important ones na most frequently asked in exams. Investment in 5-year post office time deposit, repayment of housing loan, payment of tuition fee, university, college or school, then employee contribution to PPF, SPF and RPF, then obviously life insurance premium. Life insurance premium, contribution to PPF, SPF, RPF, payment of tuition fee, repayment of housing loan, tenth point. 1, 2, 3. So deferred annuity is also something like annuity only. Payment of contract for deferred annuity. You will pay premiums now, but the annuity will start only after your retirement only. It's okay, that one only. Payment for contract of deferred annuity. Annuity, deferred annuity, they'll come under same things. Then ETCCC. Contribution to pension fund of LIC. Contribution to pension fund of LIC. Sir, here also LIC is there na? Sir, here annuity plan of LIC. Here what? Pension fund of LIC. Contribution to pension fund of LIC, ETCCC, only for individuals, not for HUF. ETC is for both individual and HUF, whereas CCC is only for individual. The maximum deduction available is how much? 1,50,000. The maximum deduction available is 1,50,000. Then sir, ETCCD. ETCCD is like, sir, in tax, if we have some complicated provisions, na, I mean, to understand, which takes time and all, 80CCD is one thing in this chapter and 80G is second thing in this chapter. 80CCD and 80G. These two provisions are little complicated, okay, compared to any other chapters also. Let's say we have some 15-20 concepts which are like requires high level of attention to understand them quickly. 80CCD is also one among them, okay. So first, 80CCD is like deductions with respect to contribution to pension scheme or NPS, National Pension Scheme. See, you are an employee. You can also contribute to your pension scheme. On behalf of you, your employer also can contribute to NPS scheme. You can contribute, and even your employer also can contribute. Sir, if you are contributing, is it any income to you? For your pension scheme, if you are contributing anything, is it an income to you? Current year. మీరు మీ డబ్బుల్ని పోస్ట్ ఆఫీస్లోనో బ్యాంక్ అకౌంట్లోనో మనీ డిపాజిట్ చేసుకున్నారు. సేమ్ వే యూ డిపాజిట్ ఇన్ ఎన్పిఎస్ అకౌంట్. ఈజ్ ఇట్ అన్ ఇన్కమ్ టు యూ? ఎస్సా నోనా? సార్ మీరు బేసిక్ క్వశ్చన్స్ ఆన్సర్ చేయలేకపోతే ఇంకా అసలు దానికి తర్వాత కాన్సెప్ట్ బిల్డింగ్ కష్టమైపోతుంది. ఓకే, బీ క్లియర్ అండ్ టెల్. మీరు రాంగ్ చెప్తే ప్రాబ్లం ఏం లేదు, కానీ ఆన్సర్ చేయకపోతేనే అసలు మీరు ఏ స్టేట్లో ఉన్నారో నాకు తెలియదు. ఓకే, సో అండర్స్టాండ్ అండ్ టెల్. వెన్ యూ ఆర్ హ్యావింగ్ సమ్ మనీ and you deposited money in bank account, is it income? Same way you deposited where? In NPS account, is it income? No. On behalf of you or for the benefit of you, I deposited money in your bank account. For the benefit of you, I given some 30,000 and given to you or deposited in your bank account, is it income to you? Yes, gift. Okay, some benefit you are getting, right? So it is what? Gift kind of, it is an income to you. Same way, if employee contributing to his NPS account, not an income. But if employee depositing to his NPS account, not an income. But if employer deposits on behalf of employee, that is an extra income to him, right? He is getting salary. Extra other than salary is getting what? Even some contribution from employer to the NPS account. So in this section, sir, 80CCD, we have majorly 2 points. Employee contribution, so 80CCD, we have employee contribution, we'll have even employer contribution. We'll have two, employee contribution and we'll have even employer contribution. Okay, sir, employee contribution, his money he is depositing for his purpose, it's not an income. But on his behalf, if employer is contributing, it is an income and then even eligible for deduction. Okay, employer contribution is an income. To whom it is income, sir? Employee. Income to employee also. Okay. Now this employer contribution related part is covered under 80CCD subsection 2. Employees contribution, we can again divide it into two. 80CCD subsection 1 and 80CCD subsection 1b. 80CCD subsection 1 and we have next thing what? 80CCD subsection 1b. Both are for what? Employees contribution only. Okay, employee contribution. Now, okay, I'll show it in my handwritten, sir, you'll understand much more better. Okay, deduction with respect to contribution in pension scheme or NPS. 80CCD subsection 1, 80CCD 1b and we have 80CCD subsection 2. So both this CCD 1 and CCD 1b both are related to what? Employees contribution. Whereas 80CCD is subsection 2 is like what? Employer contribution. Employer contribution, first it is an income. Why? Because on behalf of you, your employer is contributing. Okay, it is nothing but like a perquisite. Why it is perquisite, sir? You are getting benefit. but you are not incurring any expense. Who is incurring? Your employer is incurring. So that's why first it is an income. Take it as income under the head salaries. Under salary head, you should have taken it as income. Okay, then first we'll talk about 80CCD subsection 1, sir. Sir, to this NPS scheme, sir, one more importance or one more extra point is like, if you are a self-employed, sir, I am a chartered accountant, I am a professional, I have my own practice, I am not employed anywhere, I am working as a self-employed. Now, is this NPS scheme is only for employees? Not like that, sir. It can be even, even self-employed people also can participate. I will make my own contributions, but there won't be any employer for me separately. I will only make my contributions. So, under 80CCD1 is about what? Employee contribution. If he is employee, he will make contributions. If he is self-employed, then also he can make contributions. See, SSE is a salaried employee. SSE is a salaried employee. How much is the deduction available, sir? Actual contribution or 10% of salary, whichever is lower. How much you can contribute to 80CCD, sir? You can contribute how much ever you want. But deduction available is only to the extent of actual contribution or 10% of salary. Actual or 10% of salary. We have examples, we'll see afterwards. Then, if he is self-employed, others are nothing but self-employed. How much? Actual or 20% of gross total income. Why gross total income? Because he will not have salary. Self-employed now, he will not have salary. That's why 20% of gross total income. So, forget about self-employed. You are an employee. You contributed to 80CCD NPS scheme. How much is the deduction available? Actual sum contributed or, actual contribution or 10% of your salary. Sir, salary means what? Salary means you should take basic plus DA to the extent of farming part. Salary plus DA only to the extent of farming part, not full salary, sir. Dearness allowance, how much ever is farming part, I don't want to go and explain what is DA, what is farming part of DA and all, okay? Whether you understand or not, that's your thing. Salary equals to basic plus DA farming part. Basic plus DA farming part, that amount you take into 10% or actual amount contributed, whichever is lower. Understand? Employee's contribution. How much is eligible for deduction? Actual salary, actual contribution or 10% of salary, whichever is lower. Okay. Now what about 80CCD 1B? Sir, look at this example. Employee having salary of 25 lakhs. Having salary of how much? 25 lakhs. He contributed to NPS 1,80,000. He contributed to NPS 1,80,000. Now, how much is allowed as deduction till? Under 80CCD1. Salary 25 lakhs, assuming basic plus DA. Employee contribution to NPS is 1,80,000. Tell how much is eligible for deduction? 1,80,000. Actual amount 1,80,000. 10% of salary not 2,50,000. Whichever is lower means how much? 1,80,000. Okay. But whether 1,80,000 allowed? How much? 1,50,000 only. Which gives the restriction? 80CCE says like CCC, CCD subsection 1. All the three together you can claim maximum of 1,50,000 only. So how much is eligible but still you can't claim? Actually 1,80,000 is eligible. But because of 80CCE restriction, you can claim only to the extent of 1,50,000. How much you have to forego? 30,000. That 30,000 you can claim under 80CCD 1B. If any amount became eligible to claim deduction, but because of this monetary caps and all, it was not, you can't claim it as deduction under 80CCD subsection 1, then that amount you can claim under 80CCD 1B. How much? Additionally, for employees' contribution, another 50,000 is provided, where deduction under 80CCD subsection 1 is restricted because of 1.5 lakhs cap. That extra amount can be claimed as deduction under 80CCD subsection 1B. This is one part of 1B. The other part is like, let's say, case 2, sir, see. Salary how much? 10 lakhs. Employee contribution to NPS how much? 1,30,000. Now calculate how much we can claim as deduction. 1 lakh. 10 lakhs into 10% now, 1 lakh. Actual amount contributed is 1,30,000. Whichever is lower now, how much you can claim? 1 lakh. Now here, how much you are foregoing? You contributed actually, but still you can't claim how much? 30,000. That 30,000 also you can claim as deduction under 80 CCD 1B. So because of 1.5 lakhs cap or because of percentage cap, because of any of these restrictions, if you can't claim amount as deduction under 80 CCD subsection 1, that amount you can claim as deduction under 80 CCD 1B. Okay, see, look at this example. Here 1 lakh 80, here 1 lakh allowed. Can claim only 1.5 lakhs because of 80 CCE. The balance 30,000 can be claimed under 80 CCD 1B. Same here. But the other 30,000 can't be claimed because of what? Percentage cap. Because 10% has been exceeded. So that's why, which is allowed under 80 CCD 1B. Sir, how much I can claim under 80 CCD 1B? Maximum of 50,000. Understand, sir? So 80 CCD 1B, both are with respect to what? Employees contribution only. First one only we should take. What is the one limits? Actual contribution or 10% of salary, whichever is lower. But it has a overall limit of 1,50,000 also. If any amount actually contributed, but you couldn't claim as deduction because of 1.5 lakhs limit or percentage limit, that amount which you cannot claim can be claimed as deduction under 80 CCD 1B, maximum to an extent of how much? 50,000, to an extent of 50,000. Okay. Now here an amendment also introduced, sir. So this is the amendment which was missed in our material also. You should write there, even in the concept book also. Sir, under 80 CCD 1B, till now, employees contribution to NPS. Okay, if it couldn't be claimed under 80 CCD 1, then that excess amount we can claim under what? 80 CCD 1B. Now, under 1B, extra point also introduced. I mean, some other contribution also can be claimed as deduction under 80 CCD 1B. What is that? Under 80 CCD 1B, any amount deposited for minors under NPS Vatsalya account, that also can be claimed as deduction under 80 CCD 1B to the maximum of 50,000 for parent or guardian. I'll give an example, sir. Salary 12 lakhs. NPS contribution 1.3 lakhs. Amount deposited in NPS Vatsalya account. Vatsalya is nothing but for the benefit of minor child. NPS Vatsalya account under 30,000 they have deposited. First we should claim deduction under what? 80 CCD subsection 1. How much is allowed, sir? Actual contribution 1.3 lakhs or 10% of salary. 10% of 12 lakhs. Now how much? 1.2 lakhs. Out of these two, whichever is lower, now how much is allowed? 1.2 lakhs is allowed under what? 80 CCD subsection 1. This is right. Okay, now 80 CCD 1B. First, sir, how much is became ineligible here? You contributed 1.3, but because of percentage cap, 1.2 lakhs is only allowed. How much is not eligible? 10,000. That 10,000 you can claim where? 80 CCD 1B. So NPS, another 10,000 you can claim. Then there is another amount called what? NPS Vatsalya. How much it is there? 30,000. So total how much, sir? 40,000. So under 80 CCD 1B you can claim 40,000. Let's say here Vatsalya account contribution is like 50,000. Okay. Here how much is NPS Vatsalya amounts are here? 50,000. Total coming to how much? 60. Can you claim 60,000 under 80 CCD 1B? No. It is restricted to how much? 50,000. Restricted to 50,000. So are you able to understand this amendment? Okay. Write down this point, sir. Amount deposited for minors benefit under NPS Vatsalya account to a maximum of rupees 50,000 is allowed as deduction for parent or guardian. You can write it in notes or even in the concept book also write down, sir. Then what else we have? Employees contribution. Employer's contribution is there. Employer's contribution is covered under what? 80 CCD subsection 2. First we should recognize as income, that is there. Then deduction. Deduction. First, whether the employer is government or others. If it is government employer, I mean nothing but employee is a government employee, then the deduction available. Sir, to whom deduction? Again to employee only, double benefit. For his contribution also he will claim deduction. For employer contribution also he will claim deduction. Sir, understand, for 80 CCD subsection 2, there is no cap of that 1,50,000. 1,50,000 is available only to CCC, CCD subsection 1 only. Okay, this is in excess of that 1,50,000. Actual or 14% of salary. Government employer means. Others. Others now again we should check new regime or old regime. New regime means what? The default regime and then old regime. Sir, if he is opted for default new regime, sir, why we are mentioning here new regime and old regime? 80 CCD subsection 2 deduction is available in any regime. Either old regime or even under the new regime, 80 CCD subsection 2, not 1 and 1B. Only 80 CCD subsection 2 is available under both new regime as well as under old regime. What is 80 CCD subsection 2? Employer's contribution to the NPS account. How much is allowed? Sir, under old regime, na, it is amount contributed or 10% of salary, whichever is lower. If it is default regime, na, amount contributed or 14% of the salary, whichever is lower. Government employer, irrespective of regime, actual or 14% of salary. Got it, sir? 80 CCD subsection 1. Subsection 1, 1B and 80 CCD subsection 2. So under default regime, as of now related to deductions chapter, one point is only important. But 80 CCD subsection 2 deduction can be claimed even under new regime also. How much is the deduction, sir? New regime, actual or 14% of salary. Old regime, na, actual or 10% of salary, whichever is lower. Now we are going on to 80 CCH. Contribution to Agnipath scheme. Sir, Agnipath scheme, na, it is for Agniveers, nothing but army people. For them, for their benefit only, this section is introduced, 80 CCH. Something like NPS only. This soldiers, army people also will be contributing. The equal amount will be contributed even by government also to their particular fund. 80 CCH1 is about their own contribution. 80 CCH subsection 2 is about government contribution for them. SSC is an individual enrolled for, who is eligible, sir? SSC should be an individual and enrolled for Agnipath scheme. The deduction amount is amount contributed. Okay, amount contributed. How much ever they contribute, that is eligible for deduction. No caps and all. 10% of salary, 15% of salary, nothing is there. How much ever they contribute, that amount is eligible for deduction. Whereas 80 CCH2 is about what? Contribution made by central government behalf of SSC. Sir, when central government contributed on behalf of them means, first it is what? Income. First it is their income. So first recognize as their income under the head salaries. Sir, government given, why it is salary? They are government employees only. Army people, na, they are employees of whom? Government only. So whatever the amount contributed by government for their benefit, first realize it as income under the head salaries. Then again you can claim as deduction. How much deduction, sir? The contribution made by the central government on behalf of SSC, deduction equals to how much ever the amount is contributed. But understand, same like 80 CCD. Employees contribution, na, available only in old regime. Whereas employers contribution, na, it is available under both old regime as well as under the default regime. Same here also, 80 CCH subsection 2 available in both regimes. So second point also added for default regime. 80 CCD subsection 2 also available, 80 CCH subsection 2 also available under default regime. Then 80D. Sir, 80D is about deduction in respect of medical insurance premium paid or contribution to National Health Scheme. Who is eligible? Individual himself, spouse, Sir, check your material whether it is clearly written like this or not. Individual can contribute for himself, spouse, dependent children, parents when they are dependent or not. If it is clear, no issues then. HUF, any members. Sir, medical insurance now you can take for parents also. Life insurance, not for parents. Okay, and then life insurance for dependent and even for independent children. But medical insurance only for dependent children. Here no independent covered. Only for dependent children only medical insurance. Life insurance now for dependent children as well as for independent also. Okay. HUF could be taken it for any member. Okay. So what? Either you contributed to medical or health insurance premium or to a health scheme. It doesn't mean like only you should pay insurance premium. Any health scheme related contributions you made also, national health scheme, that is also eligible for deduction. Sir, first, here, if you are paying for yourself, your wife, children, and separately for your parents also, then you have two limits available. For your micro family, one limit, extended family, another limit. What is called micro family, sir? Individual, his wife, children comes under micro family. Extended family, then parents also will get added. Okay? So, for micro family, there is a separate deduction available. How much, sir? You made a contribution to insurance premium or for national health scheme, 25,000 is eligible for deduction. Okay, sir, you made for parents also. Then for parents another 25,000. For you, your wife, children 25,000. For parents another 25,000. Total how much is available? 50,000. But let's say parents are senior citizens. Any of your parents are like senior citizen. Then the 25,000 limit will become 50,000. Are you able to get my point, sir? If any of your parent is senior citizen, for them actually the limit available is how much? 25. Since they are senior citizen, it will become 50. Let's say you also senior citizen, parents also senior citizens. Then for you 50,000, parents also another 50,000. Then in that case, total deduction available is 1 lakh. Okay, so it could be only 25,000, it could be 50, it could be 75, it could be even 1 lakh. When 25, you took medical insurance only for yourself and your wife, not taken for parents. Then how much is available? 25 only, assuming you are not senior citizen. Okay, you are senior citizen, but not taken for parents and all. Then how much is available? 50,000. In that 50,000 only another case. You took for yourself and for parents, none of them are senior citizens. Then for you 25,000, parents also 25,000, total 50,000. Then third case, you are normal people only, 25,000. Parents senior citizens, how much? 25 plus 50, 75,000. You senior citizen, parents also senior citizen. 50 plus 50, total 1 lakh. There won't be a case like you being senior citizen and parents being normal individuals. Okay, except in Manam movie that doesn't happen in other places. In Manam movie that only, sir, Nagarjuna is not senior citizen, but Nageshwara is already senior citizen in that movie. You watch that movie, right? Except in that movie, in reality it won't happen. Okay, then. Enti payment to? If you, I'm talking about the maximum limits only. If you paid less, then only to that extent only. Amount actually paid or 25,000, whichever is lower. Amount actually paid or 50,000, whichever is lower only. Okay, since I cannot repeat always that many times, okay, and if I write that much clearly also, it will not become short notes, it will become long notes only. Okay, so it's like amount paid or 25,000, amount paid or 50,000, that only. Okay, this is the maximum amount, not minimum. Maximum you can claim this. If the actual amount paid is less than this, then the deduction is restricted to that amount only. Okay, then, sir, for senior, if either individual, his wife, senior citizen or parent senior citizen, we said like instead of 25,000 they can claim 50. But that 50,000 benefit will come only when they are resident senior citizens. Resident and senior citizens. If they are non-resident, then that extra benefit is not available. See, if senior citizen is non-resident, then deduction is only 50,000. Sorry, deduction is only 25,000. If senior citizen is non-resident, then deduction is only 25,000. Sorry, that point is there in the concept book or not? Check once. If it is not there, write down. Not there, sir. Write down that point. If senior citizen is non-resident, then deduction is 25,000 only. If senior citizen is non-resident, then deduction is 25,000 only. If senior citizen is non-resident, the deduction is 25,000 only. Then you didn't took insurance premium. Okay, you had insurance premium, and again you spent some amount on preventive health checkup. When any amount spent for preventive health checkup, 5,000 can be claimed as deduction. Sir, this 5,000 is not extra 5,000. Within the 25,000, 50,000 only, this 5,000 is a sublimit. Okay, let me give you an example, sir. A person paid medical insurance premium of 22,000 and preventive health checkup 4,000. Preventive health checkup, no problem, sir, within the 5,000 limit only. Then 22,000 also no problem. But overall it is becoming how much? 26,000. So it is restricted to how much? 25,000 only. Okay. Now let me give you another example. He paid 21,000 as medical insurance premium, and whereas preventive health checkup is like 7,000. How much first? This 7,000 is first restricted to 5,000. 21 plus 5, 26,000. But again this 26,000 is restricted to 25,000. Okay. So preventive health checkup maximum you can claim how much? 5,000 only, but not an extra 5,000, that is within that 25,000 only 5,000, or within that 50,000 only 5,000. See, this 5,000 is not additional limit. It is within 25,000 or 50,000. Mode of payment. How do you pay these amounts? Preventive health checkup you can pay in cash also, no issues. Preventive health checkup 5,000 you can pay in cash also. Any mode other than cash except for preventive health checkup. Any mode other than cash except for preventive health checkup. So this 25,000 and all, the actual premiums paid should be any mode other than cash. Sir, understand? It could, in PGBP chapter and all, will refer account to pay check, account to pay draft electronic clearing system. Here that is not needed. You could pay simply through a plain check also, no issue. Not through cash. Okay, it's not like only through specified modes. Specified modes, na, account to pay check, account to pay draft, electronic clearing system. Okay, account to pay check is different, plain check is different, crossed check is different. Here for the purpose of 80D, you paid through plain check, you paid through cross check, that also valid only, eligible for deduction. Then premium paid in lump sum. Sir, you don't want to pay every year some 20,000, 30,000 like that. Now itself you will pay 5 lakhs. And you are asking the insurance company, for the next 15 years, whatever happens to me or my family with respect to health, you only have to bear. You are paying lump sumly 5 lakhs. Then, sir, lump sumly you paid 5 lakhs, but in the current year, maximum you can claim deduction of only 25,000. Assuming you are senior citizen, maximum you can claim how much? 50,000. The other 4,50,000 is not eligible for deduction. Okay, it's a loss for us, right? Paying one time only, you are not eligible for deduction because you paid only once. In that case, what they are saying, apportionate this lump sum premium paid over the tenure. How much is the tenure? 15 years. 5 lakhs by 15. $5 lakhs by 15. 33,330. So every year claim 33,330, 33,330. Understand, sir? Assuming you are a senior citizen. If you are a normal individual, then it is only 25,000 you can claim max. Understand, sir? Lump sum if you paid and it is allowed as only one time, for us only loss. Because the rest 4,50,000 we can't claim as deduction. Only 150,000, assuming senior citizen, we can claim deduction. Rest all is a loss only. We can't claim deduction. That's why what they said, you need not to claim only once. You apportionate the total lump sum amount paid towards the tenure of the policy, and every year claim proportionate amount. Okay, check whether that every year proportionate amount is within the limits or not. If it is within the limit, then fine, you can claim it as deduction. Then, for senior citizens who are unable to get medical insurance, sir, insurance companies will give medical insurance only up to a certain age. Let's say your age is 65 or 70, then no insurance company will give you medical insurance. Why? The chance of the policy being affected or policy being striked is high. Sir, 30 years person or 25 years person, medical insurance, the health insurance companies will be running towards them to give insurance policies, because in 99% of the cases you will not have any health ailments and all, at least for the coming 10 years, 15 years. Okay, but if his age is 70 years, they don't know, maybe in the next month or second, third month also they may have some emergency and the policy gets strike. That's why they may not provide or issue insurance policies for senior citizens. In that case, since for senior citizen no company is offering medical insurance policy, they can claim deduction even with respect to actual medical expenditure spent also to the extent of 50,000. Not only the insurance premium paid, even the actual medical expenditure spent also can be claimed as deduction if they are senior citizens up to an amount of 50,000. For senior citizen unable to get medical insurance up to rupees 50,000, actual medical expenditure also can be claimed as deduction. Okay. Okay, sir. Now you can take break. So after 15 minutes again we'll start. So now we are proceeding into 80DD. 80DD. 80DD is for medical treatment of disabled. Medical treatment of disabled, and such disabled person is a dependent of SSE. SSE is not disabled. Okay. Who is disabled, sir? Dependent of SSE is disabled. Okay. Who is eligible SSE? Resident individual. Sir, understand, 80DD is applicable only for residents. Till now we didn't mention resident and all. Except for 80D, that senior citizen extra 50,000 benefit. Only we said like for residents only 50,000 available, non-resident now only 25,000. Rest all in any place we didn't mention like resident or non-resident. But for 80DD we mentioned like what? Eligible SSE is only resident individual. Resident individual. Okay. Who could be that dependent? For resident individual, his spouse, child, parents, brothers and sisters. Any of these people can be dependent and suffering with a disability. If it is HUF, resident HUF it should be, and any member of the HUF suffering from disability, then they can claim this deduction under 80DD. Sir, SSE is not disabled. SSE's dependent is disabled. Who can be called as dependents? Dependent, it should be within the family. What is family? Spouse, children, parents, brothers and sisters. If any of them are like disabled, dependent and being disabled, then 80DD deduction can be claimed by SSE. HUF can claim deduction under 80DD with respect to any members. AC on cheyochu kada. ATDD, okay. Eligible SSE is whom? Resident individual being spouse, children, parents, brothers and sisters. If any of them are suffering with disability, covered here. HUF, any member suffering with disability, covered here. Now, for what the amount has been paid? Either for medical treatment or for insurance for maintenance of dependent disabled. Let's say, sir, father might have taken this medical insurance for his son, because son might be suffering with disability. So he's always he'll be worried, like, because till he is alive he can take care of his disabled son also, but once he expires, who will take care of that disabled child? That's why at least if he has money, he could appoint someone as caretaker. That's why he might have taken an insurance policy on behalf of his son who is suffering from disability. It could be son, wife, or brothers and sisters also. So now, so payment could be made for treatment for disability or for medical insurance also. Okay, or for insurance, not medical insurance, or for insurance, because the disabled person has to live even after the expiry of the original SSE. Okay, now what is the deduction available? 75,000 in general cases. 1,25,000 if the disability is a severe disability. Sir, here alone, okay, write down clearly, sir. Even the amount spent is less than these amounts, he can claim 75,000. So 75,000 and 1,25,000 are like flat deductions. Irrespective of actual amount spent, they can claim 75,000 or 1,25,000 as deduction. Sir, actually they spent only 50,000, but still 75,000 can be claimed as deduction. 75 only. 75 is the maximum. Okay? And maximum or minimum, it is like 75,000, 1,25,000. Sir, for disabled, insurance has been taken. But what happened? Disabled only expired before SSE. Sir, insurance is paid for whom? Disabled life after expiry of SSE. I mean, the worry of SSE is like what? Once he expires, how the disabled dependent will survive. That's why he has taken a insurance policy. But what happened? Disabled only expired before SSE. In such case, disabled expires before SSE and received insurance amount, then the amount claimed as deduction is taxed as deemed income to SSE. That insurance amount he gets will be taxed to SSE. Okay. This is what 80DD. Who is suffering with disability, sir? Not SSE. Dependent of SSE. When SSE himself is suffering with disability, then 80U. When SSE himself is suffering from disability, then which sections are 80U? Eligible SSE, resident individual with certified disability. Deduction, 75,000 or 1,25,000. But when 1,25,000, sir? Severe disability. Along with return of income, you should submit a copy of that medical certificate. Sir, this condition even applies for 80DD also. Submission of medical certificate. Okay. Note, for some for the same disabled person, we can't claim both 80DD and 80U. Sir, son suffering with disability. Now father claimed deduction under 80DD, claiming son as dependent. Now son also wants to claim deduction under 80U in his own capacity. Is it possible? No. For the same disability, you cannot claim deduction under two different sections. Either father can claiming son as dependent, or else son can claim in his own capacity under 80U. Okay, understand, sir? For his one particular disability, he'll be claiming 80U and father will be claiming under 80DD as a disabled dependent. Then both are not allowed. Only under one section he can claim, either as a dependent under 80DD or for himself only under 80U. Then, sir, 80DDB. 80DDB. Deduction in respect of medical treatment for specified diseases. Specified diseases, na chronic diseases. Okay, specified diseases means chronic diseases which takes much time to cure and all, such as like cancer, tuberculosis, paralysis, okay, then HIV. So these kind of diseases which require, okay, mostly chronic diseases. Chronic now, it cannot be cured in 5 days, 10 days period and all. Okay, normal fever, viral fevers and all can be cured within 5 days, 10 days or maximum within a 1 month time. If it is chronic in nature, it will be continuing for 3 years, 4 years, 5 years, then those are called as what? Specified diseases. Now 80DDB, sir. SSC himself suffering from specified disease, then also 80DDB, or his dependent suffering from specified disease, then also 80DDB. Sir, disability, na, two sections are there. For himself 80U, for dependent 80DD. But for specified disease, SSC is suffering also 80DDB, or else is dependent suffering also 80DDB. Okay, who are called dependents? Resident individuals, sir. Here also this section also resident only, sir. Sir, all these three sections, 80DD, 80U, 80DDB, all these three treatment related sections are eligible for only to resident individuals and resident HUFs only. Okay, so the treatment could be for himself, spouse, child, parents, brothers and sisters if they are dependent. Okay, what is the deduction available, sir? Other than senior citizen. If he is not senior citizen, 40,000 or actual, whichever is lower. If he is senior citizen, 1 lakh or actual, whichever is lower, eligible as deduction. 40,000 or actual, whichever is lower. Senior citizen, 1 lakh or actual, whichever is lower. So understand this one? Okay. Now we are proceeding to 80E. 80E. Deduction on loan taken for higher studies. For higher studies. For second class school fees, if any loan is taken and for that any amount is being repaid, that is not eligible for deduction, only higher studies. Okay, but there are schools where for second class also they are charging more than that of whole CMA fees. For whole CMA curriculum, maximum it would be 2.5 lakhs, 3 lakhs. But for 1 year in second class and third class only, they are charging. There is a school nearby only, where they charge 4 lakhs. Okay, per year 4 lakhs. Okay, but including accommodation, that one. Okay, accommodation, if you subtract 1 lakh also, still it is 3 lakhs. It's okay, you might have a question, what they will teach are there. It's okay, they'll teach less, that's why extra fees. Okay, normal schools, they'll teach more. Even in study hours also, they'll not allow you to play and all. But these schools which we pay premium fees and all, they'll teach only for a specified time, 3 hours, 4 hours only. And then the rest of the time they'll give you they'll give time to learn extra skills also. If someone likes dance, dance skill, art skills, or else like games and all. Okay? For not teaching more only, we are paying their extra fees. Section 80, deduction on loan taken for higher studies. Deduction on loan taken for higher studies. Okay, for whom? Who is eligible? Only individual can claim this deduction. Sir, 80D, DDB, DD, ETU, those are not eligible under the default regime, only under old regime. Which sections are available till now under default regime? ED, CCD subsection 2, CCH subsection 2. Understand? CCD subsection 2, what? CCD subsection 2? Employer contribution to NPS scheme. 80 CCH subsection 2, employers, again, employers contribution only, central government's contribution to Agniveer scheme. Okay, so 80E, deduction on loan taken for higher studies. Eligible SSC is whom? Individual. Then interest on loan taken for higher studies. Okay, who will be studying? For himself, for his education he can take loan. For spouse education, children education, child to whom SSC is acting as legal guardian. Child to whom SSC is acting as legal guardian. Sir, or Mandeep is, you watched movie called Surya Vamsham. It was the first pan-Indian movie, sir, I think. Okay, I have seen that movie in all the languages. It is there in Hindi, acted by Amitabh Bachchan. Tamil, it is there. Telugu, it is acted by Venkatesh. Old movie, not a recent movie. Old movie. Okay, many times it has came in TV. Okay, there, okay, one song will start. That time, hero will send her wife, Meena, to study for IAS and all. By the time song completes, she'll become IAS. Okay, he'll also become a big business person also. Okay, before song starting, he'll be driving a bus. Okay, by the time song completes, his wife will become IAS. Okay, he'll become a big businessman and all. Okay, like that. Or Mandeep also sending his wife for IAS or for some higher education. For spouse, children, child to whom SSC is acting as legal guardian. So interest on loan taken for higher studies. What is called higher studies, sir? Higher studies na above 12th. Okay. So if any loan taken and the loan amount is being repaid, sir, from where loan has been taken, sir, if it is not specified, then everybody will claim this deduction, saying like we are taking loan from our friend or relative and all. So the loan should be taken from a charitable institution or financial institution. What is eligible? Interest paid alone is eligible for deduction, not the principal amount. Deduction available for how many years, sir? 8 assessment years. The initial year in which you started paying interest, plus 7 assessment years. Sir, in education loans, what happens means, interest will not start accruing immediately. There will be a cooling period. So let's say, sir, you joined medicine, okay? You took education loan and joined for the medicine course and all. Some 30 lakhs you are taken as education loan. Sir, first year itself, if they start accruing interest now, who will pay? Your father doesn't have that much money to pay interest also. Okay, so who will pay? So that's why there might be cooling period. What? First 5 years, there won't be any interest accrual also. Okay, because you cannot pay, even your parents also cannot pay. That's why sometimes, sir, it's not like always it would be like that only. There would be cooling periods also. So now this 80 years has to be counted from the year in which the interest accrual has been started. That's the first year plus another 7 assessment years. You can claim it as deduction. Sir, 8 years happened, sir, till now. Okay, I joined in CA, sir. 8 years, not 10 years it happened, but I couldn't clear CA, then what happens, sir? They given 8 years only. That's why for CA and CMA, they are not giving education loans at all. They don't have certainty when this fellow will clear, when they will get the repayments and all. So, but medicine, engineering and all, getting that admission itself is tough. Once you get that admission, most of the people, okay, will not see a doctor who failed after getting a medicine seat. They will fail before, in NEET itself. They may not qualify. Once they qualify in NEET, will not see the people who will not become a doctors. Okay, but for us, not that, that is not the case. We will clear foundation maybe, but still, we might get stuck under inter or final some stage, na? So we are special. Interest paid only eligible for deduction. Deduction available for 8 assessment years, initial year plus 7 assessment years. Then 80EE and 80EA, deduction with respect to interest on housing loan. Sir, these are not actually much important sections now, but still I will be covering now. All these sections are for houses purchased in the past only, loan also taken in the past somewhere only, but on that houses purchased and on the loans taken, even now also they are paying interest. That's why still we are talking about these sections. 80EE, who is eligible as a individual? The deduction is up to 50,000. Conditions are what? Loan taken in financial year 16-17. Sir, it is with respect to what? Housing loan. Sir, house na already interest can be claimed as deduction under house property, right? Yes, you can claim deduction under house property. This is extra. Okay? So now tell me, sir, under house property head, for self-occupied property, how much interest we can claim as deduction? Let out property? Unlimited. That means for let out property, you need not to come here. How much ever interest you have, you can claim there as in the house property head only as deduction. But for self-occupied property, you have 3 lakhs interest. How much you can claim under house property head? 2 lakhs only. Balance how much you are having? 1 lakh. Out of that 1 lakh, 50,000 you can claim under 80E. Okay? First you should claim deduction under what? House property head. After claiming there, still, if there is interest to be claimed as deduction, then you will come to 80E. Sir, okay? So, eligible SSE, individual, deduction up to rupees 50,000. Conditions are like what? Loan should be taken in financial year 16-17. And loan from what? From a bank or financial institution. The purchase price of the house should be within 50 lakhs and the loan amount should be within 35 lakhs. Okay? And SSE does not own any other residential house property on the date of sanction of loan. You should not have any other house also. This is common point for both the sections. That's why I wrote together. Okay? So what are the conditions, sir? Only individual will get this. After claiming interest deduction under house property head, still if he has any interest balance to be claimed as deduction, that interest he can claim as deduction under 80E. How much? Up to 50,000. What are the conditions? Loan should be taken in the year 16-17. Should be taken from bank or financial institutions. The purchase price of that house should be within 50 lakhs and loan sanction should be within 35 lakhs. Then they can claim it as deduction. And one more thing, other than this house which he purchased, he shouldn't have any other house. Then 80EA. Sir, 80EA is also available to whom? Individual. How much is the deduction available? Up to 1,50,000. Same here also. First you should claim where? House property head. After claiming there, still you have excess interest. Sir, you will have excess interest only in the case of self-occupied. Let out now unlimited only. You will claim there itself. So self-occupied clause only, you will come to 80E or EAA. Maximum how much here extra? 1,50,000. Here the loan should be taken in which years? 1920, 2021, 21, 22. In these 3 years. 1920, 2021, 21, 22. And the loan should be taken from what? Bank and financial institutions. Sir, here they didn't said purchase price. Stamp duty value of that building should be within 45 lakhs. Loan amount could be how much ever. No limit at all. Okay? Then they are eligible for what? Deduction, but he should not own any other residential house property on the date of sanction of loan. Sir, on his wife's name it could be, on his father's name it could be, but on his name it should be the only property, not on whole family name. Understand? Example C, sir. Self-occupied property, NAV nil. Why self-occupied property, NAV nil? No rental income will be there, right? So straight away NAV nil. Let out property, assume it as how much? 5 lakhs. Now 24 years, standard deduction. How much is the standard deduction, sir? House property. 30% of NAV. So self-occupied na nil. Let out property 30% means how much? 1,50,000. Then 24B interest. How much interest allowed as deduction, sir? Let's say the interest is 3,60,000. Let out property whole 3,60,000 can be claimed. But self-occupied property maximum how much, sir? 2 lakhs only allowed. So after claiming deductions, income from house property how much is there, sir? 2 lakhs loss. Here let out property 10,000 loss. Then income from salaries he is having. Salary how much he has? 8 lakhs, 8 lakhs. Now the gross total income. Sir, understand? How much loss he is having? 2 lakhs. House property loss can be adjusted with any other head except with casual income. Except with those betting, gambling related incomes, with any other income you can adjust. So 2 lakhs adjusted with his salary 8 lakhs. So total income became how much? 6 lakhs. Here let out property, how much loss is there? 10,000 only. Even though it is let out property, house property head loss can be adjusted with any other head except with casual income. So adjusted. What is the gross total income, sir? 6 lakhs, 7 lakh 90. And then chapter 6A deduction, 80 EAA conditions are satisfied. Since it is let out property, all the interest claimed as deduction under house property only. So we need not to claim it again. But here 80 EAA, sir, how much interest is still to be claimed? Total 3,60,000, 2 lakhs claimed here. How much balance is there? 1,60,000. But we can claim total 1,60,000. 80 EAA also gives a limit how much? 1,50,000 only. So that 1,50,000 claimed here, the net total income is 4,50,000 here. Here it is 7,90,000. 4,50,000. Here it is 7,90,000. Okay. So what is the point to be learned? First claim house property head, then come for 80 EAA. And that applies only in self-occupied case. Let out na. Sir, nowhere they said like for let out 80 EAA is not applicable. But by applying common sense, what we can understand, let out na interest can be claimed totally under the house property head only. Why they have to come again to 80 EAA? Then 80 EEB. EEB. Interest on loan taken for purchase of EV. EV means electric vehicle. Who is eligible SSE? Eligible SSE is like individual. Eligible SSE is like individual. What is the deduction available? Deduction available is 1,50,000 or actual interest paid, whichever is lower. Okay. What are the conditions? Loan sanctioned from a financial institutions between 1st April 2019 to 31st March 2023. In that 4 years period, if any electric vehicle has been purchased, and on that, if any interest is being, you purchased by taking a loan, if interest element is there, that interest element you can claim as deduction under 80 EEB to an extent of 1,50,000 or actual interest, whichever is lower. So that is the common point everywhere. Actual interest or this 50. Sir, not actual interest we are saying. Why? First you will claim under 24B, under the house property head. After claiming their deduction, that balance interest or 50,000, whichever is lower. That balance interest or 1,50,000, whichever is lower. The benefit of deduction continues till the loan is repaid. Okay, there is no limit like 4 years, 5 years and all. How many years it takes to repay the loan? That many years the deduction is available. It's okay. We have questions in deductions chapter, sir. Open workbook. We'll solve 1 or 2 questions and again we'll go to provisions. Sir, in deductions chapter, in our institute material, actually we don't have questions. Okay, that's why we are taken from CA final and CA enter questions. Compute the eligible deduction under 80C for assessment year 26-27 in respect of life insurance premium paid by Mr. Ganesh during the previous year 25-26. The details of which are given under. Ganesh has exercised the option of shifting out of default regime. He shifted out of default regime. That means under which regime he is? Old regime. Okay. Policy 30th March 2012. Policy 30th March 2012. Before 1st April 2012. So how much are available? Sum insured into 20%, which is 1,80,000, or actual premium paid, how much? 48,000. So whichever is lower now, how much? 48,000. So deduction is like how much? 48,000. Actual sum insured 90 lakhs, insurance premium 48,000, restricted to 20%, but still, how much is available, sir? 48,000. Now, 1st May 2018, sum insured into 10% or actual premium paid, whichever is lower. So 10% of sum insured now how much? 15,000 or 20,000, whichever is lower means how much? 15,000 is allowed. Then third case, 1st June 2021, handicapped son, suffering with disability, life insurance premium, how much is available, sir? 15%, 4 lakhs into 15%, which equals to 60,000 or 80,000, lower now how much? So total is like how much? 48, 15, 60, total 1,23,000. Sir, if this total exceeds 1,50,000, again that is restricted to 1,50,000 only. Okay, this is 80 CCD related, sir. Basic salary of Mr. A is 1 lakh. He is entitled to dearness allowance, which is 40% of basic salary. Out of that DA, 50% forms part of retirement benefits. Sir, what is the salary definition for 80 CCD? Basic plus DA farming part. So salary is 1 lakh plus how much is the DA, sir? 40%. I mean 40,000. But whether the total 40,000 is farming part? No. 50% of it is only farming part. So plus 40,000 into 50%, if you add total, it comes to how much, sir? 1,20,000 is the salary we should count. Okay. A and his employer, ABC Limited. Sir, ABC Limited, private employer or government employer? Private, non-government. Contributed 15% of his basic salary to pension scheme referred in 80 CCD. Explain the tax treatment in respect of such contribution in the hands of A if he has exercised the option to shift out from 115 BAC. Shifted out from 115 BAC. That means under which regime he is? Old regime. Okay. So now, first we'll find out for employee and then for employer. First we'll find out what? Actual contribution. Actual contribution. How much is the actual contributions are here? 15% of not the salary we computed, basic salary. How much? So that means 1 lakh into 15% into 12. Every month they are contributing, na? 1 lakh into 15% into 12. employee contributed 1 lakh 80, employer also contributed 1 lakh 80. Okay, then what is the limit given here? The limit here under 80 CCD subsection 1, how much, sir? 10 percentage of 1 lakh 20,000. Why? Salary means basic plus DA. 10 percentage of 1 lakh 20,000 into 12. Why 12? Because we want yearly. Or, okay, 10 percentage of 1 lakh 20,000 into 12. How much, sir? 1 lakh 44,000. Whereas here, how much is the limit, sir? Sir, he is under old regime only. Okay, old regime, non-government employer means 10 percentage only there also. So 10 percentage of 1.2 lakhs into 12. How much? 1 lakh 44,000 only. So what is the deduction allowed here? Actual or 10 percentage, whichever is lower. So how much is allowed, sir, here? 1 lakh 44,000. Here also 1 lakh 44,000. This is under 1 lakh 44,000. This is under 80 CCD subsection 1. This 1 lakh 44,000 under which section? 80 CCD subsection 2. But we have another section also called 80 CCD 1B. So under section 80 CCD 1B, okay, how much we can claim? Actual how much, sir? 1 lakh 80 minus how much you already claimed under 80 CCD 1? 1 lakh 44. Balance how much is there? 36,000. This 36,000 we can claim where? Under 80 CCD 1B. We can claim under 80 CCD 1B. Understood, sir? So this is the total deduction they can claim. What would be your answer? What would be your answer if A pays tax under the default regime? Sir, under default regime, na 1B not allowed. But which is allowed? 80 CCD subsection 2 is allowed, which amounts to 1 lakh 44,000. It's okay. See here. 1 lakh 44, 36,000. Then employer's contribution to pension scheme was also 1 lakh 44,000. Then where A pays tax under default regime, then 1 and 1B not eligible. Only however, sir, new regime, one mistake, sir. New regime, if he opted for new regime, it is not 10 percentage. He can claim up to how much? 14 percentage. So 14 percentage, na, how much? Actual 1 lakh 80,000. 14 percentage of 1 lakh 20,000 into 12. 2 lakh 600. Whichever is lower, na, 1 lakh 80,000 he can claim under which regime? Default regime. Not just 1 lakh 44,000, sir. 1 lakh 80. Because in default regime the limit is 14 percentage, not 10 percentage. 1 lakh 80 would be allowed as deduction. It's okay. Look at this question and tell, sir, what is the answer? Question number 3. Solve on your own and tell what is the total deduction available if he is under old regime. Identify which sections also they are related to. Sir, contribution to PPF, etc. Tuition fee to APJ school, tuition fee, sir, allowed, etc. Housing loan, principal repayment, etc. So total how much, sir, here? 1,55,000 plus 25, not total 1,80,000. But under ATC maximum you can claim is how much? 1,50,000 only. So 1,80,000 already restricted to here 1,50,000. Then contribution to approved pension fund of LIC, 80CCC. Okay. And again here this is under 80CCC, another 1,05,000. Total it becoming 2,55,000. Again it is restricted to 1,50,000 only. So the overall the deduction available is only 1,50,000. Okay. Now look at question number 4. Thank you. Happy Holi. Yesterday only here people celebrated Holi. Happy Holi. But I don't have colors with me, but I have a color material. Sir, you read the question, right? 40 years. Paid medical insurance premium of how much? 22,000. Okay. For him, insurance, medical insurance, how much? 22,000. Of his spouse, dependent children, all part of family only. He also paid medical insurance premium of 33,000 during the year to ensure the health of his mother. Mother also covered here. So mother, separate limits, sir, for mother. Parents, na? So 33,000. Then who is not dependent him? He incurred medical expenditure 20,000. Sir, since father senior citizen, that actual medical expenditure is also available. So actual medical expenditure, how much, sir? 20,000. Then who is not covered under any medical claim? His father is not dependent on him. He also contributed 6,000 to central government health scheme. Central government health scheme contribution, how much? 6,000. Okay, so total if you do how much, sir? Here for him 28,000 and for parents he spent 53,000. Since parents are senior citizens, this 53,000 restricted to how much, sir? 50,000. Since he is normal individual, 28,000 restricted to 25,000. So the total deduction available is 25,000 for he, spouse and children, 50,000 for parents. So overall deduction available is 75,000. The same question only, right? Question number 5. Oh. Let's say here parents, senior citizens, na? Parents are like non-resident, then it is restricted to 25,000 only. He is a non-resident, parents resident. Then for parents 50,000 is available. Yes. See, it's simple. The extra 50,000 benefit available, only such person having the benefit is resident. Otherwise 25,000 only. Okay, because of senior citizen they are getting extra benefit now, just like as slab rates. Slab rates also under old regime 2.5 normally. If senior citizen 3 lakhs is there, but only when resident senior citizen. 5 lakhs also there, only when resident super senior citizen. Okay, being resident they are getting extra benefit. Same here also, being resident, instead of 25,000 normal limit, they can claim extra 50,000 as the limit. Okay. Okay, look at question number 5 also, sir. Question number 5. Okay, sir, age 40 years, paid medical insurance premium of 20,000 to insure his health as well as health of his spouse. He also paid medical insurance premium 47,000 for the health of his father. So for him, how much, sir? 20,000, and for parents another 47,000. Age 63. Okay, he contributed 3,600 to health scheme. Okay, how much is the contribution to health scheme? 3,600. He has incurred 3,000 in cash on preventive health checkup for himself and spouse. Okay, sir, preventive health checkup can be made even in cash also, no problem. So here 3,000, and for parents also there another 4,000. Compute the deduction available. So what is the total here, sir? 51,000. Here it is how much? 23,600, 26,600. But overall it is restricted to how much, sir? Here 25,000. Here it is restricted to 50,000. Why? Because father is senior citizen. So total deduction available is how much? 75,000. Okay. So question number 6 is linked to 80G. So 7 is 80JJ, so that we can do afterwards. So now come back to the theory discussion. As I said already, 80G is one of the CCD. I said like it takes time, little complicated. Same way 80G also little complicated. Okay. 80G is with respect to donations made to certain funds and charitable institutions. Now here the problem is there are 4 category of funds. Category 1, category 2, category 3, category 4. Okay. So category 1, if you made any contributions under category 1, 100% of the amount contributed is eligible for deduction. Okay, let me show you, sir. 1 second. It's okay, sir. Sir, this is like from CA interfile. So don't worry that, don't take it, or don't feel offended that I am opening CA final materials or CA materials. The problem is like CMA file, it will be in a single file. The whole 500 pages, 600 pages. So I cannot open the specific chapter file easily. That's why I opened that one. Okay. Otherwise, some people will feel like he's teaching CMA. Why he is opening CA study material? Why can't you open our study material only? So I can open, but it takes much more time to load and all. That's why I opened this, since it is easy to open. See, there are 4 categories of deductions. The following, okay, category 1, sir. What are the funds? If you see, there are total 24 funds are there under the category 1. Okay, it's not possible for us to remember. Just I'll read out. Okay. National Defense Fund, set up by central government. Prime Minister National Relief Fund. Prime Minister Earthquake Relief Fund. Africa Contributions Fund. National Children's Fund. Okay, National Foundation of Communal Harmony, approved university or educational institution of national eminence. Okay, that money will be used to construct these universities and all. Chief Minister's Earthquake Relief Fund, Maharashtra. State Government of Gujarat Relief, Gujarat Earthquake Relief Fund. Jila Saksharta Samiti constituted in any district for improvement of primary education. Okay, then National Blood Transfusion Council related fund, state government fund to provide medical relief, Army Central Welfare Fund, Naval Benevolent Fund, Andhra Pradesh Chief Minister Cyclone Relief Fund, which is happened in 1996, National Illness Assistance Fund, Chief Minister Relief Fund, Sports Development Fund, National Culture Fund, Technology Development Fund, National Trust for Welfare of Persons with Autism, Cerebral Palsy, Mental Retardation. And then amount contributed to Swachh Bharat Kosh or to Clean Ganga Fund or National Fund for Control of Drug Abuse and Prime Minister's Citizen Assistance and Relief in Emergency Fund, nothing but PM Care Fund. Okay, so now if you look at here, PMCM Relief Funds, Clean Ganga Fund, and then if anything extra, Swachh Bharat. Plus Army Defense related funds. Okay, any national development funds. Okay, these are the major words we have seen there. Okay, we cannot remember all of them, but PMCM relief funds, there could be any disaster related, earthquake related, cyclones related, all them. Clean Ganga Fund, Swachh Bharat related, Army Defense related funds national, and any other national development funds. These are covered under what? Category 1. If any fund is covered under category 1, and for that fund if you have made any contribution, then that is eligible for 100% deduction. That amount is eligible for 100% deduction. Okay. Then category 2. In category 2, sir, there is only one fund, which is PM Drought Relief Fund. PM Drought Relief Fund. If you made contributions to PM Drought Relief Fund, then 50% of the amount contributed is eligible for deduction. You contributed 1 lakh, you can claim deduction of 50,000. PM Drought Relief Fund. Then category 3 and category 4 are little important, sir. Category 3, what they are saying, like what are category 3 first? Government or local authority. You contributed to any government or local authority for promotion of family planning. Okay, then if any donation is made by company to Olympic Association or to any sports authority. So category 3, 2 points are there. Family planning 1, next one is like sports related. Okay, category 3. Then category 3, what they said, sir, 100% of the amount contributed is eligible for deduction. Then category 4, what they are saying, like category 4, 50% of the amount contributed is eligible for deduction. But what are there in category 4? You contributed to any charitable trust or any charitable fund, or for renovation of temples and any other religious place, or for protection of minority interests. For them, if you made a contribution, then they are covered under category 4. So first we should have clarity about what is category 1, category 2, category 3, category 4. 1, PMCM relief funds, Swachh Bharat and Clean Ganga funds, army defense related funds, and then any other national development fund covered under category 1. How much is the deduction, sir? 100% of the amount contributed. Then category 2, PM drought relief fund, category 2. How much is eligible for deduction? 50% of the amount contributed is eligible for deduction. Then we'll go to category 3. Category 3, what? 2 only are there. One is family planning related, and the next one is related to Olympics and sports development related funds. Category 4, charity related, renovation of temples related, and then development of minorities. For them, if any contributions are there, category 4. 1 and 2, no problem, sir. Straight 100% and straight 50%. The problem is with category 3 and 4 only. What they said? Under category 3, 100% of amount contributed is eligible for deduction, but it is subject to qualifying limit. Category 4 also they said 50% available, but subject to qualifying limit. So we should know what is called this qualifying limit. What is this qualifying limit? Okay. Sir, qualifying limit is nothing but 10% of adjusted gross total income. Qualifying limit is nothing but 10% of adjusted gross total income. Now the question is, what is this adjusted gross total income? See, adjusted gross total income means first you take gross total income normally. Then from gross total income, sir, in gross total income even capital gains also will be included, right? So subtract the capital gains which are taxable at special rates. You should not subtract 111 short-term capital gains, sir. Sir, there are 4 types of capital gains. Long-term 2 types, short-term 2 types. Short-term one is 111A, the other one is 111. Sir, 111A na taxable at special rate 20%, whereas 111 na taxable at normal rates only. So that normal rate taxable short-term capital gain you need not to subtract. Only special rates applicable capital gains you will be subtracting. Then all the other deductions except ADG, ADC, DE, all the other deductions also you subtract. If any exempted income like 10AA is included in gross total income, that also subtract. Okay, then you will get what? Adjusted total income. Adjusted total income. Now, what is qualifying limit, sir? This adjusted total income into 10%. Qualifying limit equals to 10% of adjusted total income. Okay, so you got qualifying limit also. So what we should check, sir? Deduction under, see, here this is an example, sir. Qualifying limit, let's say it is 3 lakhs. Qualifying limit is how much? 3 lakhs. Amount contributed to government for promotion of family planning is 2 lakhs. Sir, which category it is? Category 3. Contribution to temples for renovation, which category? Category 4. Sir, category 3 how much, sir? 100% subject to qualifying limit. Category 4, 50%. So first we claim category 3, then only we'll go for category 4. Sir, qualifying limit 3 lakhs is there, na? And here 2 lakhs. 2 lakhs 100% we can claim because it is within the limit only. So category 3, 100% of the amount contributed, 2 lakhs is available. Now category 4. To claim category 4, how much balance is there under the qualifying limit? 1 lakh. Sir, what we think normally means 50% of the amount contributed. How much? 1 lakh. And 1 lakh within the limit only, na? So we'll claim total 1 lakh as deduction. That's wrong. The provision is balance in qualifying limit into 50%, amount contributed into 50%, whichever is lower. See category 4. Amount contributed into 50% and qualifying limit minus category 3 deduction, nothing but the balance in qualifying limit into 50%. Okay, so what is the balance in qualifying limits are after claiming category 3? 1 lakh. So 1 lakh into 50% and even 2 lakhs into 50%. Which is lower, sir? 50,000. That 50,000 can be claimed as deduction. What is the most common mistake we'll do, sir, here? We'll not do qualifying limit, balance in qualifying limit into 50%. We'll do just amount contributed into 50% and we'll claim that as deduction. But what we should do? Amount contributed also into 50%, the balance in qualifying limit also into 50%. Out of these two, whichever is lower can be claimed as deduction. Whichever is lower can be claimed as deduction. Okay. Then 80G deduction is available to every SSE. Every SSE. He could be individual, HUF, AOP, BOI, AJP, company, firm, anybody can claim. Whereas if the donations are in, even the donations are in kind, also allowed. But greater than 2000 in cash, if you are making donations more than 2000 in cash, then they are not allowed as deduction. So above 2000 now you should make through what? Other than cash payments only. Right. Okay, now let me check whether we can solve this question. Question number 6. Shiva, age 58 years, has gross total income of how much? 7,75,000, comprising income of salary and house property. Has made the following payments and investments. First one, life insurance premium paid to insure the life of her major daughter. Sir, minor daughter or major daughter, both covered for life insurance. Policy taken on or after 1st April 2012. Sum issued is how much? 1,80,000. So 1,80,000 into 10% or 20,000, whichever is lower. How much, sir? 18,000 here. Then medical insurance premium for self 12,000, spouse 14,000. Sir, he is not senior citizen. So total how much? 26,000. But together how much is allowed? 25,000 is only allowed. Then donation to a public charitable institution rupees 50,000 by way of check. Sir, which category it is? 80G category 4. We'll do it towards the end because we need to calculate qualifying limits and all. Okay. Then LIC pension fund 80CCC, how much? 60,000 is allowed. Then donation to National Children's Fund. National Children's Fund, na, then, sir, I don't think National Children's Fund covered anywhere. Okay, let me check once again. See, we'll go through the category 1. Defense Fund, Relief Fund, Earthquake Fund. Yes, National Children's Fund is there. Okay, so national funds, na, you can clearly take it as what? Covered under category 1. So this is 80G, what? Category 1. Donation to Prime Minister Dot Relief Fund, category 2. Donation to approved institution for promotion of family planning, covered under what? Category 3. Deposit in PPF, ETC deduction is available. So first, what they took gross total income 7,75,000, correct only. First we should claim what? ATC. Sir, ATC related what are there? Life insurance 18,000 is there, and then PPF 1 lakh is there. Okay, so total how much, sir? 1,18,000. ATC related, life insurance 18, PPF 1 lakh, 1,18,000. Plus there is 80CCC also, 60,000. So total 1,78,000, but restricted to 1,50,000. 1,78,000, but restricted to 1,50,000. Then 80D, we already discussed, 26,000, but restricted to 25,000. Then the rest pending is what? 80G. Okay, so now what we should do, sir? First we should calculate what? Qualifying limit. Okay, sir, 80 category 1 and category 2, no problem, sir. Straight away we can claim. Category 1 how much? 25,000 we can claim straight away. Category 2 25,000 into 50%, how much? 12,500 we can claim, no problem. We have problem with what? Only this family planning related and this donation to public charitable institution. We should calculate what? Qualifying limit. How do we calculate qualifying limit? Adjusted gross total income. First you should take normal gross total income. Sir, in the question did they mention that they are having special rate incomes? No, they have only house property and salary income. So we need not to subtract 111A, 112A, 111 income. Done. What is point number 2? We should subtract all the other deductions except 80G. So what are all the other deductions? From 7,75,000, you subtract 1,50,000 and 25,000. How much? 6 lakhs. From 7,75,000, you subtract 1,50,000 and then 25,000. These are the other deductions. These are the deductions other than 80G. So how much we got? 6 lakhs. So 6 lakhs is what? Adjusted gross total income. What is qualifying limit? 10%. How much? 60,000. Okay. From this 60,000, first we should claim category 3 or category 4? Category 3. So how much is category 3s are here? Promotion of family planning 40,000. So first claim 40,000. So 40,000 is also allowed. Category 1 finalist 25,000, done. Category 2 finalist 50%, 12,500, done. Category 3 how much, sir? 40,000. 100% is allowed. Okay. Now what is the balance in qualifying limit after subtracting category 3? 20,000. Okay. Balance in qualifying limit 20,000. What is the amount contributed for charitable trust? 50,000. So what we should do? This 50,000 into 50%, the balance in qualifying limit also into 50%. This into 50% na 25,000. That into 50% na 10,000. So what is the category 4 limit available, sir? 10,000. Okay. So here it would be only 10,000. If you add how much, sir? 77,500 plus 10,000. If you add 87,500. They explained the total. Okay. Here they said, see, the contribution of 50,000 to trust is restricted to 20,000, being 60,000 minus 40,000. So 50% of which is, therefore the deduction is 10,000, which is 50% of rupees 20,000. So total deduction under 80G is 87,500. Subtract that. Net total income is 5,12,500. Okay. So tomorrow, sir, in the first session itself, we can complete deductions, and from second session we can start with return of income. Once we complete return of income also, then we'll go into straight away PGVP only. Okay. Donation. What I wrote here. Okay, donation in kind not allowed. Not allowed only. In handwritten what I wrote. Not allowed only, correct. Okay, donations in kind and greater than 2,000 in cash, both not allowed. Both not allowed. Okay, so correct on. Donations in kind also not allowed as deduction. Okay, thank you all.